Hi everyone, my name is AMIRA binti HALIM from the IA5D. Today I'm going to talk about the introduction of taxation. So the first one is the definition of tax. So what is tax? Tax are involuntary fees levied on individuals or corporations and enforced by a government entity, whether local, regional or national, in order to finance government activities. Economists, tax falls on whomever pays the burden of the tax, whether this is the entity of being taxed, such as a business, or the end consumer of the business goods. Next, why we need to pay the tax? What is the objective of paying the tax? So the first one is for the price stability. So for price stability, by tax we can control the inflation. So next is economic development. For economic development, to overcome the scarcity of capital, government set up that private and public investment government tax revenue. So the third one is full employment. Since the level of employment depends on effective demand, a country desirous of achieving the goal of full employment must cut down the rate of tax. So next is non-revenue objective. So taxation is the reduction of inequalities of income and wealth. Next are reduction of BOP difficulties. Tax are like custom duties are also used to control imports of certain goods with the objective of reducing the intensity of balance of payment difficulties and encouraging domestic production of import substitutes. So the last one is control of cyclical fluctuation. So during depression, tax are lowered down while during boom, tax are increased so that cyclical fluctuation are tamed. So next we move on to the scope of charges. So for the scope of charges, the chargeability of income is governed by Section 3 of Income Tax Act 1967, which stated that income shall charge for tax for each year of assessment upon the income of a person occurring in or derived from Malaysia or received in Malaysia from outside Malaysia. So next, we move on to another subtopic. Thank you.
ALIAS, and now I want to present about the types of tax in Malaysia. We have two types tax in Malaysia, which is we have direct tax and also indirect tax. The first one I want to go through with the direct tax, which is the first is corporation tax, which is direct tax imposed by the jurisdiction on the next is the real property gains tax, which is the imposed to the property or asset within 3 years of acquisition. This is more to non-permanent residents or company which has not been incorporated in Malaysia. The next one is imported into Malaysia. The second one is import and export duty. The tax is collected from the imports and some exports by the country customs authorities. The last one is excise duty, any duty on manufactured goods that is levied at the
Assalamualaikum warahmatullahi wabarakatuh. My name is NURUL BARI'AH BINTI HASHIM. I want to explain about classes of income. Classes of income is under Section 4 of Income Tax 1967, and there is 6 classes of income, which is gains of profit from a business, gains of profits from an employment, dividends, interest or discounts, rents, royalties or premiums, pension, annuities or other periodical payments not falling under any of the foregoing paragraph, and then gains or profit not falling under any of the foregoing paragraph. That's all.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURAFRINA ARISHA binti NAZRI. So now I will explain about definition of basis period, basis year and year of assessment. The first one is basis period. A basis period is the time period for which a sole trader or partnership pay tax each year. Second is basis year. Basis year for a year of assessment means the calendar year coinciding with the year of assessment. And the last one is year of assessment. Year of assessment refers to the year which income tax calculate and charge. So next we will move to other subtopic.
Next is for chargeable person to pay tax income in Malaysia. Firstly is resident taxpayer. Any individual earning more than 34,000 ringgit per annum after EPF deduction are chargeable to pay income tax in Malaysia. This will also include income from your business or profession, employment, dividend, interest, discount, rent, royalty, premium, pension, annuities, and others. For salaried employees, this will also include your bonus, overtime, commission, and all other taxable income. The second one is for the non-resident taxpayer. A person is considered as non-resident under Malaysian tax law if you stay in Malaysia for less than 182 days in a year, regardless of their nationality. Whether you are a Malaysian or a foreign worker, as long as you reside in Malaysia for more than 182 days in a year, any income you earn in Malaysia is taxable under non-resident income tax rate. A non-resident taxpayer will be charged a flat rate of 30% based on year assessment 2020.